Hello traders, in this tutorial I will be discussing how to use ARCs as dynamic support and resistance. ARCs are a valuable tool to have in your toolkit, especially when it comes to timing the market. This tutorial builds on the foundations I laid in the previous tutorial about Gann angles. The most crucial point to keep in mind is to apply the correct scale to get accurate results. However, scaling can be a tricky issue as it is somewhat subjective and requires some charting knowledge. As I mentioned in the previous tutorial, my job is to provide and explain the content to the best of my ability. Your job is to ask questions and not take anything I say for granted. Please feel free to share your comments and questions in the comment section below, or you can email me directly. In the first part of this tutorial, I will briefly explain, the theory behind ARCs as a dynamic support and resistance tool. After this brief explanation, we will move on to practical charting, where I will demonstrate how to chart support and resistance arcs together with you. First and obvious question is, what is an arc? An arc is a diagram visualizing the connection between two factors. In trading, these two factors are price and time. From a trading psychology perspective, arcs are a visual representation of human emotions, mainly greed and fear. When an arc falls from a swing high, the decline accelerates along the arc and people cannot resist the fear and they are forced to sell. Similarly, when prices rise, they creep slowly at first, then move more quickly. In the last phase, the acceleration is so strong that anyone who wants to invest will be forced to do so. The difference between arcs and Gann angles or regular trend lines is that they are circular and describe increasing or diminishing rates of change. They are used to keep track of time and price movement since the last high or low occurred. An arc can visually show us how the downward or upward influence is manifested and how much more time it will take to reach the following low or high. Before we proceed, I want to clarify something. Arcs are not the holy grail because trading has no holy grail. Every method of analysis has its advantages and disadvantages. It simply is a different way to look at the charts. As traders, our thinking is primarily linear. We look at the price and ask ourselves, is it going up or down? Linear. We draw horizontal and diagonal lines, which are also linear. Sometimes we want to think outside the box. Then what do? We invert the scale, also linear. Arcs are inherently non-linear. It is a different way of thinking. Do I always use arcs? No. Arcs don't necessarily have an advantage over trend lines or angles. However, sometimes the chart is a riddle. When the conventional analysis doesn't cut it, I turn to arcs. And arcs have one distinct advantage in timing. Not every arc is significant. It's not as if arcs are an accurate timing tool, but sometimes when everything else fails, arcs come to the rescue. And between you and me, would you invest an hour or two of your time if you could just get one optimal trade entry or exit? If your answer is yes, then go right ahead because this will probably give you a lot more than just one good trade over time. Fib arcs are a method to utilize Fibonacci-based ratios to price trends. The arcs can be of two types: Fibonacci resistance arcs and Fibonacci support arcs. It is worth noting that using Fibonacci arcs, which is a dynamic overlay indicator, will produce different outcomes based on the type of scale, whether it is a log scale or an arithmetic scale, and the scaling itself. As in the previous tutorial, I encourage you to move your charts to arithmetic scale. In my experience, arithmetic scale works the best. These are the citations. If you are interested in further reading, then get a hold of these books, and I'm sure you will find them very useful and interesting. Now we are moving on to practical charting. Before we begin, we must first set up the chart. What do I mean by setting up the chart? First issue is scale. You need to use the correct scale. I already discussed scale extensively in the previous Gann-Fan tutorial. I also said in the previous tutorial that sometimes scaling simply isn't practical, and it could be that you will decide to keep the scale, the current chart scale. That's okay. If it works for you, that's okay, 100%. But what you must do is you must move over to your settings and lock price to bar ratio. Why do you need to lock price to bar ratio? I will demonstrate. Let's first uncheck lock price to bar ratio. And let's pull a fib speed resistance arc. It doesn't have to be accurate. I just want to demonstrate something. When you zoom in and zoom out, your angles are moving and you don't want that. Okay? So what you do is lock price to bar ratio. Before scaling or after scaling, it doesn't matter. Now let's introduce the tools. I primarily use two tools. First tool is the Fib speed resistance arcs, and the second tool is the Fib wedge. Let me just show you my setup. Let's click Fib speed resistance arcs. This is my setup. It's a custom setup. Okay? Because you can see that what the values you have here are not Fibonacci values. They are Gann values. And let's first apply the default, and then I will explain how to set up your own tools. Let's apply the default. Apply defaults. These are the defaults. The defaults include different background color and different color for each line. Personally, I prefer to use one color and no background. It's only an issue of convenience. It doesn't matter very much. I uncheck the background and I use one color. What is important is the values. Okay? Now, sometimes you need to adjust the values to fit the distance that you want to project. If you want to project long distance, then you don't need the 0.236, you don't need the 0.382, you don't need anything. You need the above 1, let's say 1, 1618, 2618. Okay, but sometimes you want to check between one arc and another. Let's say between the 1 and the 1.618. What you will do is you will check the lower values and type 1.382 and see if it fits. Okay, now there is no rule. You use what works best for you and what fits the chart. How will you know what fits the chart? You need to trade this chart. You need to be familiar with its behavior, and you need to try different templates. I have two default templates. One is the Gann speed resistance arcs, and the second is a regular fib speed resistance arc. How do you do that? Let's say that this is a template that I want to save. Then what I do is I save drawing template as, and we can give it a name. Okay, now we have this template as one of our templates. Let's discuss these tools. The first tool is the fib speed resistance arcs. I already demonstrated this tool. Second tool is the fib wedge. I will show you how to draw the fib wedge as well, but I just want to show you it's the same with the fib wedge. You can adjust the values, adjust the background, choose colors. You can choose different colors or one color, and you can also apply, let's say this is Gann values. You can apply Gann values, or you can apply Fibonacci values, whatever works best for you. There are no rules. The only rule in trading is that you need to be making money consistently, and you use what works to make money. If it makes you money, if your analysis is correct, and as a result you are trading on the right side of the market, then by all means use whatever values you like, whatever techniques you like, okay? Because there is no one looking over your shoulder and telling you, hey, you need to do this or you need to do that. Okay, now the chart is prepared and we are moving over to practical chart. First example, practical charting example, is how to find support or resistance. In this case, it will be resistance by using Fibonacci arcs. The chart is the Caspa chart, it's the spot chart, and the chart is already scaled. I didn't scale the whole chart, I just scaled the downtrend because from my point of view, I wanted to pull, or I pulled this fib speed resistance arc, excuse me, when I assumed that Caspa has already made the low, and I want to project possible resistance levels into the future, especially if and when Caspa gets above its former all-time high. So I scaled the chart. How did I scale the chart? I took the value of the all-time high. I deducted from it the low, 9.3 cents, and I divided by the number of days. I moved over to settings, chart settings. This is the scale, log price to bar ratio. Okay, the chart is scaled. Here, to make my job more convenient, I draw horizontal and vertical lines. This is the low, one horizontal and one vertical. This is the high, one horizontal and one vertical. And it makes my job more convenient. Let's pick fib speed resistance arc, and I want to find resistance from the low. You can see how the lines are making my job a lot easier. It says measure twice and cut once only, right? And to the high, measure twice, cut once. Okay, now what do we see? The most important Fibonacci ratio is the 0.618. And you can see that the 0.618 was resistance. Now, let's not be naive. Is it only because of this arc? Yes or no? Most probably, in this case, the answer is no. And why is that? Because we are at a horizontal resistance level. However, it happens that sometimes price is behaving in a way that you cannot explain. You can see that it obeys level, but the levels don't have supply zones or demand zones or an established support or an established resistance, and you wonder why. What happened to the price? Why did it stop here and reversed, or why did it pull back? And resistance arcs are a tool that you can use. Maybe the reason is because of the arcs. Now, another advantage is that it helps us to project prices behavior in levels that we don't have any history about. For example, we will know in the future if this arc, the 0.786, if it was relevant to Kaspa's price action. I'm assuming that the one level will be relevant, and I'm counting on the 1.618 to be relevant in the future to act as resistance. Am I right or wrong? Only time will tell, but I already pulled this fib speed resistance arc. It doesn't cost me anything. And if and when price gets to these levels, I will have something that I didn't have before to evaluate if price is behaving in a predictable manner, yes or no. Okay, that's it for fib speed resistance arcs to find resistance. How to use Fibonacci tools to time the market. What I mean by timing the market is that sometimes an asset, you know, if you are intimately familiar with the chart, you know sometimes that something has to happen on the chart, whether it's a move to the up or a move to the downside, but you know something has to happen. The only question is when. And you need to find a tool that will allow you to time the market as much as it is possible, okay? And you need to be intimately familiar with the chart you're trading. For example, Kaspa's chart is a chart that I know very well, and I know that Kaspa is obeying the fibs very well. This is why when I wanted to time this market, I scaled the chart. Of course, the chart is already scaled. Then I choose the fib wedge and I pulled the wedge from the beginning of the uptrend. Why from the beginning of the uptrend? Because I want to time the next uptrend, okay? So I'm going from bottom to bottom. Then you pull the fib in a straight line to the high. You see how much the vertical lines help? The verticals and horizontals, they just make your job easier. One click, pull the wedge down, place it on the line, second click. Okay, when I did this, Caspa was, it was the beginning, the end of January, the beginning of February. And when I pulled this wedge, I knew I had something. Why? Because I call this synchronicity. When things happen in some sort of a, when you see the chart obeying a rule or obeying a level many times, then you know you have something on the chart. And here you can see that the one level was resistance once, twice, three times, and I was looking for movement on the chart. So I just knew it because of these examples, that when Kaspa will reach the one level again and touch it again, something will happen on the chart. Now, I didn't know if it was to the up or to the downside, but I think that it was safe to assume that it is going to be to the upside, simply because it spent such a long time in a downtrend. And when Kaspa touched this line on February 6th and 7th, you saw a very nice reaction. Where to? To the next fib level. This is why I say that Kaspa is obeying the fibs. You can see how well Kaspa is moving along the fib lines, and this is something that if you trade an asset and analyze an asset, you will know it. You will know what tools to use for this chart, okay? So this is how to use Fibonacci tools to time the market. If you want to time the uptrend, you go from bottom to bottom. If you want to time the downtrend, you go from top to top. Okay? I hope everything is clear, and this is how to use Fibonacci tools to time the market. Next example, and the last example, is how to use arcs to find support. The chart is the XRP chart, not a chart that I usually trade, but I was curious to see if XRP obeys the fibs, and it appears as if it does. Now I want to find the low, or I want to find support levels for XRP. What I did was, first I scaled the chart. Okay, how did I scale the chart? I took the low, almost 41 cents. I took the high, 75 cents. I subtracted the low and I divided by the number of days. And we are moving over to our Fibonacci menu. We take the Fib speed resistance arcs. Now we want to find support. So we go from the high to the low, and this is what we get. Now I will try to show you with the replay, but it appears as if, yes, these Fibonacci levels, they are substantial. They have meaning on the XRP chart, but Fibonacci arcs, it's not a brick wall, okay? When the momentum is to the downside, nothing will hold the price. You can see that it is reacting, but it is slipping through these Fibonacci levels. Where to next? If this downside momentum will not be arrested soon, then most probably 47 or below, 47 cents or below is the next target for XRP. And I will leave this circle on the chart, and I will get back to it sometime in the future just to see if I was right or wrong. Let's try and do a replay, and the replay will illustrate how these levels are really are important on XRP's price action. And play. Reaction, reaction, slipped through. Another small reaction. Here it reacts very well to the point 618. No wonder. And at this point, we are waiting to see if the circles will arrest XRP's downside momentum at the one level, and it could possibly be on February, close to the end of the month. Maybe the downtrend on XRP's downtrend will be over and done with. That's all I have for you on Gann arcs or Fibonacci arcs. I just want to shout out or to give an honorable mention to a person on YouTube. He's called Gann Journeyman. Okay, look him up. Unfortunately, it looks like it's not an active YouTube account. He doesn't post to YouTube anymore, but he does have a very unique way of using the fib speed resistance arc, and I encourage you to look him up on YouTube, Gann Journeyman, and to learn what you can from his video. That's all for Fibonacci arcs or for arcs in general. I hope you found it useful. Please leave me a comment, even if you don't have questions, which you should have, but even if you don't, just leave me some feedback on the comment section, just for me to know that what I do helps you with your training journey, because this is the only reward I'm asking for. Thank you very much and goodbye.